Morning, Jay Shaw Real Estate. On my way to a property inspection in Dayton, Texas. Got a building under contract out there that we're going to lease out and do some cool things with. More on that later, but I'm excited. I was just listening to a YouTube. I shouldn't say watching because I'm driving, but and then I looked up some news articles as well. And there's really good news in the economy. The predictions for PPI, Producer Price Index, and CPI, Consumer Price Index, meaning what your producers have to pay for the things that they have to pay for to produce their goods, and then CPI is what we pay for those goods. So those predictions have come out better or more bullish than expected. Same with retail prices. So what does that mean? It means, well, inflation is being stemmed and reducing. So those are the December numbers that just came out today, this morning, or a little bit earlier this morning. So if you go on, if you want more information, you can Google it, YouTube it, do CPI today or PPI and CPI today, or go on YouTube and look at some of the pundits on there discussing what this means and getting into the numbers more. But essentially, for all of us investors, agents, it's good news. If you have stock, if you like investing in stocks and things like that, it'd be a good day to look into those sort of trades and maybe make some moves for the real estate industry. If this stays looking good, this means that interest rates may not be going up as high as some people were predicting they might go up. So the Fed rate right now, I think, is 4.5. That's not what we pay for our loans. It's the Fed rate. Banks put on a point or two on top of that, which I've discussed in a previous video. But the bottom line is that they're talking about a 25% increase to rates, which may still happen, even though this good news, we don't know. But what I like about this most, from my perspective as a real estate broker and investor, is that it's not so much that we need rates to go down. That would be nice, but we need the Fed to sort of pause, and we need rates to stabilize so that everybody can get back to normal with their buying and their selling of real estate and understand what their cost of ownership is going to be once that loan closes and that deal closes. So overall, great news. Looks like the Fed's rate hikes and other things are having an impact on inflation. I think one of the primary reasons, I don't want to give Fed all the credit, I think one of the reasons is Americans are smart enough to kind of reel in their spending and take a little bit of a wait and see approach to their spending, and that puts pressure on prices, as we know. So it's not just about the federal mortgage interest rate, although that's probably the biggest driver, but we all are out there as we make decisions on what we buy and what we use and what we consume. We have a big impact on that as well. So good news, everybody. Have a good day. Happy investing.